Fellas, you know Degree Cool Rush deodorant, right? Well, last year they changed the formula, and guys were mad about it. One dude even started a petition. So guess what? Degree heard us, admitted they messed up, and brought the original Cool Rush scent back exactly how it was. And it's in Walmart, Target, and other stores now for under $4. So grab some and remember why its cool, crisp, and fresh scent made it the #1 men's antiperspirant for the last decade. Degree Cool Rush is back, and it smells like victory for all of us.
Reality radio for a really great future. We're talking real money.
Well, we're back on a brand new radio station. How did that happen? Just 1 week to the next. Brand new place. Hi, everybody. I'm Don. That's Tom here on Northwest News Radio.
Formerly?
Some other kind of news radio.
Oh, okay. We can't say that.
I'm just not going to do it. I just, if we do it.
The station formerly
No. If you do it, then you're going to be, it's the habit will be difficult to break. We must break the habit.
There's something I'm just going to keep on. I don't care. How old?
Yeah.
You ain't going to change it now.
You are Mr. Rut Boy. I mean,
there you
come
go.
on. You really are. You
Tom
call me
Rutt
every
stuck.
morning at 9:30 a.m. Not just 9:30 and 30 seconds, but 9:30 and 00 seconds.
That's not rut. That's precision, dude.
Yeah, grape nuts.
I only eat those on weekends.
Rut. Hi, everybody. We're not going to talk about grape nuts or ruts or radio stations. We're not.
I have a backup box, by the way, because you go through they're running low again on grape. I don't know they apparently don't grow grape nuts or something anymore. But they're running low.
They import them from China in big grape nut slabs that are made at the giant grape nut slabbery.
Saving them for the athletes that aren't showing up for the games.
They bring over like 22,000 pound slabs of grape nuts because they only have the breaking machines over here where they break them into.
So they're circling Long Beach right now. From last October or something.
Right.
Okay.
And the birds are going, wow, there's some good stuff in there.
Grape nuts. Yummy.
See, we're still doing food. I want to give you a phone number so that you can call us and tell us to be quiet. 855-935-8255. 855-935-TALK to talk about Real Money Matters, because real money, I mean, it's really a part of your life and you really have to deal with it. And there are a lot of problems, concerns, things that will trip you up, that will make you crazy, that will drive you nuts, particularly if you were an owner of the stock formerly known as Facebook. Speaking of a formerly known as, wow, when was the last time you saw that big a movement in a single stock in a single day?
Well, and a single huge company. You may see that with smaller issues.
Yeah.
But that's kind of a big player.
Well, it was almost $1 trillion market cap prior to Thursday. We're talking about Meta.
Yeah.
Meta. Dumbest Meta. I am not going to play in the metaverse. I don't care what you tell. I'm too old. I'm not meta-ing.
Just lucky enough to have a big screen television. So yeah, I mean, for the people that want to own individual stocks, Meta show you how you shouldn't be doing that, okay?
Meta show you how.
Yeah. Okay, so you lost 26% in one day.
Yeah.
Big deal. Right?
Two investors walked into a bar and met a bad day.
Met a real bad day. But I turn it around when people say, yeah, but I own Microsoft because it only goes up, or I own Amazon because I know the company.
Facebook only went up for more than a decade.
Yeah. I own Boeing because my father-in-law works there.
Mm-hmm.
Individual stocks open you up to the potential of, a 26% loss in one day. Yeah, the chance of default where the company can go away, and it does happen. It's happened right here in beautiful Seattle, Washington Mutual, among others.
Mm-hmm.
And here's the other thing it opens you up to. You won't do better owning individual stocks than just owning the market, because there's no one else who picks stocks. The professionals don't pick stocks better than owning indexes. So why do you do it?
Because I want to do better than everybody else.
Yeah.
Because I am smarter than everybody else, Tom, and you know it. You know, you just won't admit it because you're jealous of my smartness.
Well, that may be true.
No, you're not.
I may be jealous of your intelligence.
No, but not of my stock picking ability.
Yeah, nobody does it better than the market over the long haul. Get over it. The only reason to own individual stocks is the exact reason you just said. I'm going to beat the market. I'm going to do better than being in index funds. And the people that operate mutual funds that do this for a living, that have, hundreds of millions of dollars to do the research, to take pictures of parking lots, to tell how many people are shopping, all those things, all those advantages, and they don't beat the market.
855-935-TALK is our phone number, 855-935-8255. Give us a call, and we'll try to help you make money make more sense so you can make more money, maybe.
Tom and Don are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at Vestory.com, Vestory.com.
Tom and Don are talking real money.
Hello again. Welcome back to our little get-together. I'm Don McDonald. Over there, under constant harassment by aircraft from around the world, is Tom Cock. Doesn't that ever concern you
correctly?
to look up and like see a plane strafing
because
you?
these are plastic, but it does concern me that a serious earthquake, I'm probably a goner. I mean, there's some heavy stuff over my head, so that's probably that C-130 comes down.
Plastic is going to rain on you.
That's pretty heavy.
Yeah,
so
would you
we'll see.
Fill them with lead? Or is that where you keep your gold? That's where you keep your gold.
Well, that's my Bitcoin.
Like that
sitting up there in the
giant
belly.
$11 million block of gold somebody set in the middle of the street in Central Park.
I saw that, yeah.
It's a lot of gold. 855-935-TALK. Give us a call, 855-935-8255, if you have a money-oriented question, as I assume Tom does. Hi, Tom. Welcome to Talking Real Money.
Hey, Don and Tom. Got a couple of questions. Number one, Tom, can you tell me, you have a small cap, and I think you call it Avanis. Can you give me the ticker symbol for that?
That is A for Alpha, V for Victor, U for Uniform, V for Victor, AVUV. Avantis Small Cap Value Exchange Traded Fund.
Excellent. Thank you. The other question.
Yeah, you're welcome.
Vanguard TIPS, is that worth anything?
Well,
I would only use TIP. Yes,
it has a net asset value, so it's worth something.
No, I would only use, a couple of things. Yes, I think TIPS could add to a portfolio. Depends how the bond portfolio is constructed. I wouldn't run out and buy it today because inflation is here, because you would have had to have already owned it. It really reacts to unexpected inflation. And I would only own it in a tax qualified account, an IRA, Roth IRA, somewhere like that. I would not own it in a regular brokerage account because it's horribly tax inefficient. But yeah, I think there's value in owning TIPS, which are bonds issued by the U.S. government that, as I said, sort of readjust for inflation every 6 months.
Okay, so let's say you have a few dollars and you're tired of playing the CD game. Where would you park it at that would be okay?
Oh, Don's got an answer for that one.
That question.
That's too easy. That's too easy.
Question. It depends. See, here's what we're doing, and this is a normal thing. This is not just you. This is everybody. We think about the investments before we think about the reasons for the investments. We're putting the cart before the horse. What do you want from this money should be the first question you answer. What do you want it to do for you?
That's easy because I have the VT as well as the WAX, and I have the BND as well as the total bond. So, I'm retired and I'm trying to spend everything I make each month, but that doesn't always work.
Oh, but the reason I ask that is because if you have it in CDs, the implication, not necessarily the reality, but the implication is I want 100% safety. And no matter what happens, I want to make sure that I get my interest and that I can get my money back at the end of that term, no matter what. Is that you?
No, because I have some in Vanguard, short-term investment grade.
Then, you know what?
And how much money are we talking about?
Yeah.
Well, we could be talking up to 20,000 or more. I mean, I might be.
Is this
Don,
not emergency money? Is this not emergency money?
No, if I want to buy a car or want to get my kitchen remodeled, then I might go and get it. But it's not. I mean, I got a Roth,
if you needed to, because you said something really interesting. If you needed to buy the car or remodel the kitchen, could you quickly pull the money out of, say, that short-term bond fund?
If I wanted to, or I can pull it out of a Roth.
Okay. The reason I say that is because, are you married?
Yes.
So there's two of you.
Yes.
Do you know that you can buy something better than tips?
That's why I call you.
It's a thing called I-bonds.
I got them already. I picked them up when you bought them.
Never mind.
That was our secret.
That was my secret. That was the only thing I had left. I would just add it to the bond fund you already have. That's what if this was my money and I was like you described yourself, if it was mine, I would just add it to the short term and the BND, which is an intermediate term. And if you really need the money, you just cash out some of those bond funds, or you take the money you need for something out of your rebalancing that, of course, you do every year, right?
Correct.
There you go.
Yeah.
Thanks, Tom, for the call. By the way, you're recommending buying bonds right now?
I know. I'm a contrarian. I'm not. I'm a normalian.
There's
this
a
is
lot
what is
of
normal.
chatter about not buying bonds right now because interest rates are going up, Don. So why would I buy bonds now when interest rates are going up?
No, they have gone up. They might.
I just looked
go
right
up.
over in the corner there. They're going right. They're still going.
They might go up. How far up will it? See, we're
going to do one of those.
Do not. I have a third question for you since he only asked two.
Oh, what's the third?
Well, because you need three questions. Always. Question
Always
three.
The rule of three.
It's
okay,
the rule of
Roman
threes.
Rule of three.
Yeah.
Okay.
What is the carrying weight of a swallow?
I think the correct response to that is that the African or European variety. I was starting to say North European. European.
You
or
started
African.
to say North
Okay,
American.
that is there's going to be very few people that know that.
But they'll be old. They'll be old.
Yeah, they'll be old.
They'll be old.
They'll be
our age.
Internet.
They'll be our age.
Type it in the Google machine and you'll find it.
Anyway,
so you're silly, but yes, I was being silly with Don. You should always own bonds if you own bonds.
No, he was harassing me, folks.
Yeah, so
that was harassment.
You call that harassment?
That's harassment.
That is nothing.
I want you. I want him punished. What was I going to tell you?
I do the show with you 2 hours every week. Isn't that
That's
enough?
punishing enough. 855-935-8255 is our phone number. 855.
Thanks for the call.
935-TALK. Yeah, Tom. Thanks for the call. And remember, this is really important. You will never, ever pick the right thing at the right time. See, everybody wants to do that. It's like, well, what should I own now? Given the current circumstances.
Well, that's one, but they also look at their statements and say, that one's losing money. I just want everything to go up at the same time.
Well, on Thursday, I looked at my statement, which I should not have done. Ron Lieber, we'll talk about him later. I shouldn't have looked, but I did look, and pretty much everything except my value fund was down. Pretty much
International
everything.
Value is having a decent year, but everything else has gone down.
I am apparently a bad market timer. 855-935-TALK, 855-935-8255 as we talk real money, both on the radio, on Northwest News Radio in Seattle, and on the podcast.
Tom and Don are talking real money.
Let's find out what's happening on our roads. Let's head to the Dubin Law Group Traffic Center.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com. Vestory.com.
Hello, we're back. Yeah, Tom's reminiscing about his past stupidity. You did. You left your bag at the airport that time.
There's plenty of it.
You got to Florida. He goes, I'm so excited to be in Florida. I forgot my bag.
We actually we left it out there at the curb,
and it was still there when we
drove
went
around.
Back.
We came. Oh God! And I was scared because everything is in that. computer. I mean, every
855-935-TALK. Give us a call. Scott, you're up next. Welcome to Talking Real Money.
Hi, Scott.
Hello there, Tom and Don. A quick question for you. On the U.S. News website where they have Morningstar, it's interesting to see for Vanguard's mutual fund for energy that it's done quite well, yet it has a history of negativity. It's interesting to see that when all the rest of the Vanguard aren't doing so well right now.
What's the ticker on that?
Well, I don't have that paperwork in front of me, but anyway.
I'll find it.
So this is an energy
index.
Mutual
It's
fund.
an energy index fund.
Okay.
It's VENAX. That's the Admiral shares. It invests in energy. And, here's the thing about sectors. They do well at times.
Well, no, but what he's saying this one has done well despite the energy sector not doing well. I think that's what I heard. Is that what I heard you saying?
It has a history of negativity, too.
No, but it's done exactly the same. I'm looking at the numbers. It's done exactly. I mean, it's basically tracked the energy industry. It's the index and this exactly mimic one another, except for the difference in the expenses. I'm looking right at the Morningstar chart. They track together. Now, in 2020, the energy sector declined 33%. That was a bad year for energy. But in 2021, it was a 56% gain.
And just to clarify, this is not the kind of investing that we recommend, because
this is not investing anymore. It's gambling.
You're purchasing a sector with the idea that, well, it has to rebound because it went down because people were driving less, they're driving more. That's speculative. I don't know what the expense ratio. I'm sure it's still reasonable because it's Vanguard.
0.1.
Yeah, so it's low. But again, this is just it's making a bet on a particular part of the economy. We do not recommend that.
And it is primarily betting for oil because ExxonMobil is 20% of the portfolio. Chevron is 18%. ConocoPhillips is 8%. Schlumberger is 3%.
That's almost 50% of the fund right there in those first four issues.
Right. So it's very, 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 very focused on oil. If oil prices rise, as they have over the past year and a half, or year and a quarter, then this fund is going to do incredibly well. But what happens when oil
throwing
falls?
gas on the fire at that point?
Kind of like that, yeah. And just let that one go.
Sit for a minute.
And when oil doesn't do well, it's not going to do well. Now, the long-term potential for this, think about it for a minute. It's not good.
Because in this year, aren't there like a ton new electric cars? I mean, we're kind of heading away from consumption of oil.
We're getting right to
extent.
that the cusp of a change.
The tipping point, I think they call it.
There's going to be some sort of a tipping point. Now, companies like Exxon are investing a lot in alternative energy, so they'll probably survive. But for these big gains, these things. No one would have guessed when oil was selling for $- a barrel.
That's right. We were going to buy a whole tanker at that point, right?
Well, they were going to pay us to buy the tanker.
That's right. We're going to set it right outside there.
No one would have guessed that oil would go from where it was then to where it is today. This is a speculative place, and you don't want to play there.
Thank you.
You're welcome. Thanks for calling.
By the way, oil had the best week of any security this week.
Well, yeah. Did you look at the gas station down the street?
I try not to because it's painful every time I go there.
It's so
I think
funny.
I'm paying more than $4 or something now. It's ridiculous.
I around Christmas, I took a trip up to St. Augustine to see my kids and grandkids, and I went to Sam's on the way, and I paid like $2.70 a gallon. Yeah. And then I got back home and it was $3.15, which is okay. And then this week it's $3.50 a gallon.
I think I just paid $4 the other day. So
again, this is the game we play with oil prices. We've been doing this since 1974. 855-935-TALK. Call.
Tom and Don are talking real money.
Northwest News Radio 1000, FM 97.7. And
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
Reality radio for a really great future. We're talking real money.
And some of the most important conversation you're going to find anywhere on the radio continues. And by the way, even in the metaverse.
Good Lord.
I'm not even sure what a metaverse is yet.
This is as close as I'm ever going to get to the metaverse is my take. So ain't going to happen.
Yeah, I have to bring you kicking and screaming.
I have a computer now, and what's this thing called? FaceTime or something?
Yeah,
it works.
yeah,
So I got that and a microphone.
He still doesn't get it. 855-935-TALK is the old-fashioned way to call us.
It works.
It's the old tech. Well, it's actually not old tech anymore. It's kind of fascinating when you look around. You think about when we were younger and everything had to go through a wire. And
yeah,
good luck finding a wire.
TL4 8900, sure. Yeah.
You actually had a number with letters that you remember?
Yeah. Oh, yeah, sure.
And I thought I was older than you.
Still written down somewhere, I think, just to be sure.
I swear I'm older than you. I never am. Okay. Anyway, let's go to our next caller, shall we?
Yeah, good idea.
Bob is on the line waiting to talk with you, Tom. Bob,
Thanks,
welcome
Bob.
to the show.
Thanks, fellas. This is Bob calling you from my black rotary dial desk phone.
Ooh. Okay. He gets the crown of Luddite extraordinaire.
It would sound different, but go ahead. Thanks, Bob.
I have a son who is 20, and he recently started working for a municipal employer. They offer a defined benefit pension plan, and they also offer a 457, and I have never worked for an employer that offered a 457, so I don't know much about them, and I'm kind of curious if I could get a little primer on them. How do I know if it's a good plan or not? What the fees and costs might be? What's a high fee? What's a good fee?
Well, with a 457, first thing you need to think is 401k.
Same deal, except operated by, as you just mentioned, government entities.
Okay.
In terms of whether or not he should participate, I think at age 20, absolutely. I mean, might the fees be higher than what you get at XYZ Corporation in a 401k? Maybe.
Can I modify?
But that doesn't matter.
Can I modify that answer just a little bit? I have a slightly different opinion, just a little. Just a little, because he's got the defined benefit plan, the old-fashioned pension. That's nice, but that means that this is not going to get any match to the 457. It's just going to be his money going in. And I have to tell you that unless he can afford to invest beyond $6,000 a year, I would be tempted to start with the Roth, his own Roth, in really inexpensive ETFs or funds, really inexpensive index ETFs or funds, like the Vanguard Total Stock Index or the combination of the Fidelity Total Funds or the Schwab Total Funds or whatever it might be, and do that first. And then if he has anything per year left over above that $6,000 that he can put away for retirement, that can go into the 457. But again, I would want to look at the quality of the investments. I still would. No, what are they? Are they expensive, actively managed funds?
Well, okay, but Bob wanted to know what we considered expensive.
Anything over about 0.5% is expensive.
Oh, that's funny. I was just thinking the same thing. 0.5. If they're more than that, then I like Don's advice. Sure.
I even like Don's advice if they're 0.2, because you can get ETFs that are at 0.04.
He could go open a Roth IRA, and just because we know the numbers at Vanguard, own VT for, I think it's like 0.1, 0.9, 0.09.
No, 0.03 or 0.04.
It's very, very, very inexpensive. So that would be, I think that's a good starting point. Yeah. So,
that makes sense?
Does
that help?
That is helpful. Would they typically offer also Roth 457s?
No.
I don't think so.
I don't think I've ever seen one. I mean, they might. I don't know, but I've never seen one.
Okay.
Oh, I lied about Vanguard Total. You were closer to
how much?
0.08. 8.08.
8 basis points. Roth, 4.57.
I've never seen one. Have you?
I have not come across it. No, and I'm not seeing it here either.
Yeah. Some
it
places
it
do
permits
offer
it. Yep,
Yeah,
it
it's
does allow
permitted.
for that.
So if they had it, that'd be great. But still, unless they are using the least expensive mutual funds or ETFs out there, like the index funds from Vanguard, Fidelity, Schwab, iShares, those guys, I'd still be tempted to do the cheaper Roth because it gives you a lot more control, and then do the 457 with a little bit over and above that. He needs to sit down and budget and see how much per month he can put away for retirement. If it's less than 6,000 Roth, if it's more than 6,000, combo Roth, 457. Thanks for the call.
Tom and Don are talking real money.
Hey there, I'm Don.
And I'm Tom from Talking Real Money. You may think you understand your investment.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
Tom and Don are talking real money.
Hi, it's those two guys on the radio or on the podcast who talk about money all the time. You know them? Some people, for some strange reason, and I'm not sure why, compare them to the car talk guys. Why would they do that? Somebody's actually,
we're still doing the show. We're still
Hmm.
doing the show, and we're both still alive. So that's
well,
one
they
difference.
were older than we are now.
Okay. All right.
So
Yeah, fair enough,
we got a good 10 years left in us, don't we? Not you.
I'll do this show until they tell me I can't, but that's just me.
Well,
I like doing it.
Then that was Friday. They just and you just
Time's
paid no
up.
attention.
I didn't answer the
You
door.
didn't
Somebody
answer the
was there
phone.
knocking. It's over.
Speaking of
Thanks
which,
a lot.
that's how I got fired from Business Radio Network. The guy knocked on my door.
Dropped the thing and ran?
The evening before my show and said, by the way,
nice.
You're fired. We sold your program.
Don't be on tomorrow. So
No, don't be on
bother.
tonight. That was when I was
tonight.
doing
Lovely.
nights. 855-935-8255 is our phone number. Scott, you're next. Welcome to the show. Hey, Scott.
Thanks for taking my call. Appreciate it.
Glad you're doing
I have just one quick question on. I was a Fidelity investment. I'm still a Fidelity investment guy, and I had it in there. I had it in their value growth or whatever, aggressive growth, I would say. And then I switched it to Berkshire Hathaway A. And I wanted to know your opinion on Berkshire Hathaway A. And that's all I have now is Berkshire Hathaway A.
That you mean like Warren Buffett's? Berkshire
Yeah, that's the one he's
Hathaway?
talking about. A shares, not B shares. A shares is the big one.
Yeah.
A shares is the big one.
What's my opinion? I mean, the guy who runs it, I think, even tells people just go own an index fund or something.
He does.
But they've done well. They haven't done as well the last 15 years. They did the 30 odd years before that. It's a value fund.
And it is a very, very small. It's a company that owns companies. It's not a mutual fund.
Correct.
It's
Yeah,
a
it's a
company
little
that
different.
owns companies, but it is a very, very non-diversified investment. It's not well diversified. It's mainly big industrials and insurance.
Yeah.
It's
It
really
is big industrials with Duracell, and it's a conglomerate, right?
It's a
Yeah,
conglomerate,
that's a
but
good way to
it's
say it.
like buying it's in essence buying a big company that is in a lot of different businesses. So what you're doing is you're betting on one stock. Berkshire really is just one stock. It's like, a good example is probably GE when it was in the business of
funny, I was just thinking
jet
that, yeah.
engines and technology and power plants and loans and financial services and all these things. GE was not just one company. It was a company of a lot of companies. And that's what Berkshire is. So to me, it's almost identical to just owning a giant company, a single company, and you are subject to the risks of owning a single company, and we believe those risks are way too high. And it hasn't done that well lately.
Well, the last 15 years have been harder. I mean, I think you could have just owned the Vanguard Value Index Fund and made more than Berkshire Hathaway performed. So, and remember, that's a lot less risk to be in an index fund because you own a lot more securities. As Don correctly points out, when you own Berkshire Hathaway, you really own one security. It truly is one stock.
And we really do. If you've listened to the show for any period of time, you know we would rather see you massively diversified and not in a stock picker fund like your aggressive growth fund, but in a stock index fund. Even as aggressive, I mean, however, I don't care how aggressive you are. If you want to be super aggressive, then go put a lot in small cap value or have some emergings, but diversify like crazy, which I don't believe you're doing right now.
And you can go to talkingrealmoney.com and you can see our free index fund portfolio at Fidelity. It's right up there. So take advantage of that.
Yeah. No, I think it's a mistake. Personally, I would not own Berkshire Hathaway. I will never do it. I never have, never will. 855-935-TALK is our phone number. And Joanna, you're next.
Hello.
Joanne?
I am calling. I'm a senior, a widow, and I'm calling about an IRA account. It was just brought to my attention that no children involved. My husband and myself, we've been each other's beneficiary. Well, he has passed away, and there is nobody on there. What is the best advice you can give me now? Do I have to put specific charitable organizations, a trust fund, or without it going to probate and losing most of it? Do you understand? Am I explaining that?
Yeah, okay. Yeah, I do understand. If it was my money and I knew what charities I wanted it to go to, yes, I would make explicit those beneficiaries explicit, no question. If the money instead goes into your estate, remembering that IRAs bypass, there's a direct move from the IRA to the beneficiary, so it doesn't have to go through the estate. But if it did in your case and it went to the estate, et cetera, does it make it more complicated and the potential for messing things up? Absolutely. But remember, if you leave the money to a charity, there's not going to be any tax ramification, whether it goes directly from the IRA or goes into a trust and then to the IRA. And then to the charity. That's not going to matter because they don't pay tax on that anyway.
So 100% goes to the charity.
Correct.
Is that what you're saying?
Yes, ma'am.
Yeah.
Okay. I do not have a trust. Which would you? Does it? What does that?
How
mean,
big is your
a trust?
estate? How big will your estate be?
Roughly.
My investments are one thing, but the IRA is about $1,030,000.
Okay, so you have other investments that are going to go to other people. Is that correct too?
Yes.
You're getting to the point where you might want to, you probably do want to bring an attorney in because there could be not only savings for you, but less hassle for heirs and the recipients of those assets if you have them properly. At least look at the options between a trust and just a standard probate and using beneficiaries.
Remembering that the great state of Washington only gives you an exemption up to $2 million, I think. So anything over that, you may pay a state. It gets messy. So do I think you're a good candidate to at least go see someone to talk about it? Absolutely. I would recommend that highly. And they can give you specific legal advice, which, of course, we don't like doing on this show.
Can't. Are incapable of doing.
We could do it, but
no, we can't. We'd be bad at it. Don't listen to us for legal stuff. Thanks.
So,
good luck,
anyway,
Joanne.
Yeah.
Thanks for calling.
That's something people forget about their IRAs, by the way, that the money goes directly from the IRA to the recipients. So you can have a brokerage account the same way with a transfer on death, TOD, on that account, go directly from the account to the person you want it to go to. So you can set it up that way so you don't have to worry about estate planning per se.
Yeah, I was just looking up Berkshire Hathaway's long-term returns. They have, over 10 years, they've averaged about 15% per year, which is comparable with equities.
Over the last 10.
Over a broadly based, pretty close. But the fact of the matter is the risks are higher.
What's the standard deviation?
I don't even have that because it's a stock. I would have to calculate.
Oh, that's a good point. Yeah, that's a good point. Yeah.
So it's harder to figure out. But I know I came back to that again. Hey, our number is 855-935-TALK. Remember, you can call that number on Saturdays when we're live on Northwest News Radio or anytime, and we'll answer your questions on our podcast.
Tom and Don are talking real money.
Let's find out what's happening on our roads. Let's head to the Dubin Law Group Traffic Center.
At some point, most investors need professional financial guidance. So get a little bit of free help or a lifetime of affordable 100% fiduciary guidance at vestory.com, vestory.com.
Money.
Because we want you to do all the things you do with money better. That's really important. We don't want you to fritter away your money. We don't want you to pay big commissions. We don't want you to get ripped off. We don't want you to have messy portfolios. We want you to follow the science, to follow the research, to do the things that are best for you, your family, and your long-term future. And I got a question on yesterday's podcast from somebody who said, you know what, I love the show, but I really hate these long and involved questions where somebody goes through their entire portfolio, and they really should save that for a meeting with one of your advisors. And that's why, one of the reasons why we offer that, because sometimes your questions and your issues are bigger than we can handle in the course of a show or a podcast. That's why we want you to contact our advisors and use them for free. No obligation. Just set up an appointment at vestory.com.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Apella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?